Good morning. It's Wednesday, April 23rd. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. And no, I'm not being held hostage. A lot of people will say that to me, joking around whenever I do a broadcast from a hotel room, something like that, with a blank wall behind it. But this is kind of funny is that I'm in the new office right now. And something I did was I shut the two doors and it locks at the top and there's no door handle. So it's going to get real interesting when I got to go to the bathroom and end up climbing out a window here, circle around the house or something like that. So we'll see what happens here. But looking at these markets overnight, you can see there's a lot of green on the screen here. There's a lot of red as well. So we're going to want to identify that. So I think it's time to start looking past the tariff crash. I gave a warning sign kind of on the gold market over the last couple days here in the last couple of videos that I think we're most likely near some kind of short-term peak. We'll have an update on the charts here today with some key levels of support and some possible entry points and levels for risk management. So you'll want to check that out here, specifically on the gold market because of that nice sell-off that we have here. And a lot of people have been peeling off some of those positions looking for some re-entries. So looking at the overnight markets, there's about 3-4 things that I'm watching here. You want to look at that comment that Trump made on Powell. You want to look at the China trade deal, Tesla, Apple, and then the macro response in some of these markets. So kind of starting off with China, President Trump said he plans to be very nice with China in any kind of trade talks and that the tariffs will drop if the two countries can reach a deal. Trump added that he wouldn't see the need to play hardball with Chinese leader Xi Jinping during the discussions, and he wouldn't raise the COVID-19 talk. And remember what China said is that they're willing to negotiate, but they've got to show respect for China, where Trump has been really aggressive with a lot of these other political leaders. He's got to dial that back with China because of the fact that, our countries are the two largest economies out there. So that kind of put this feel-good feeling in the market. Then something I do want to look at real quick is Apple, because Apple and Meta were fined 700 million pounds by the European Union for violating antitrust rules. Apple was fined 500 million, and then you got Meta fined 200 million. And you look at Apple in the pre-market, because that was a lot of headlines out there, it's actually up 3.4%, up $6.58. You look at Tesla, and you'll look at the earnings and what had happened there. We want to check the price real quick on Tesla. So Tesla up 4.6%, up $10 as it is recording. And why do we check on these things? Why, if we're precious metals people, why do we check on Apple and Tesla? Well, because we know that when we're trading here, it's not just one thing, it's everything. So you look at Tesla's stock, it jumped around 7% despite missing analyst estimates for revenues and earnings, with the company citing weakness in its core automotive business and a tariff headwind. So Elon Musk said that he would devote more time to Tesla starting next month, scaling back his work with the government, which has concerned investors, and now the cook is back in the kitchen. So when we look at these different things here, we look at how people play, because when you have US equities going back up, people are more likely to see an economic expansion, and that's what helps the copper, the silver market, platinum, palladium, and things like that. You'll see some of those outflows out of the gold market because the safety play is going to come off here a bit. Now, when you check it on Powell, because this is very important, because we all know that the interest rate impact the Federal Reserve plays on the price of the dollar index, the price of treasury yields, and it has that ripple effect on the gold market. Well, I think a couple things here with Powell is that, one, yesterday, I think Trump had a reality check when Bank of America's CEO said that they do not see interest rate cuts in their projections for 2025. So that's another big head coming out there saying that, look, just because you want the interest rate cuts, there might not even happen, and they just might not happen now. So you look at Powell, President Trump, he said he had no intention of firing Federal Reserve Chairman Jerome Powell, despite his frustration with the central bank not moving more quickly to slash interest rates. We always talk about how Powell uses, the rear view mirror and things like that in order to do things. And it's just the fact that the Federal Reserve doesn't really speculate. They put the dot plot out there, and the dot plot is really what President Trump should be looking at and seeing what the Fed sees going forward as far as inflation expectations, as far as employment, as far as the interest rate cuts. And I think that that's probably what was presented to him, to say, hey, we're just not there yet, but in the future we could be. So Trump, he wants Powell to lower interest rates, saying it's a perfect time. And he'd love to see Chairman Powell do it early or on time as opposed to too late. So Powell and his colleagues have kept the interest rates unchanged this year after lowering them by a full percentage point in the last few months of 2024. That's how Trump sees it, as he was trying to aid Biden. But the reality is that it was overdue for them to take things down a bit, as inflation has remained sticky, but just a little bit higher, but trending towards some of the targets that they're looking at. Now we're kind of leveling off, and we really do need to see how the tariffs play out, because it just makes sense to see what's going to happen there. So we want to look at things like the Fed Watch tool. That's where we're going to be checking on that every single day here, because of the fact that we want to see Powell cut the rates, and that could provide some tailwind for a lot of different markets here. So what's important to note on where interest rates are at. The current Fed funds rate is 4.25% to 4.5%. You're going to have that first meeting on May 7th, which is 14 days away, and there's a 7.4% chance of a 25 basis point interest rate cut. So the likelihood of them cutting rates, very low at the moment at this next meeting. It's when you go out to June 18th, because we'll have more clarity on the tariffs and things like that. That's where we have a 60% chance of a 25 basis point cut, and the possibility of tacking on a bit more here for a 50 basis point cut is about a 4.7% chance. So we could see a big cut once we do level off and things like that. You look at the treasury yields here, they are ticking down and edging lower. So they were 4.33% when I started writing the report, and now it's about 4.31. So you look at the 10-year futures and options on the long side, looks very interesting to me. So that could be a possibility of a next play. Now looking at risk assets across the board, something that we've been noting and that we've been identifying in the chart pack is that Bitcoin rising about 2.3% right now, up about $2,160 at $93,820. So you look at Bitcoin, it's been edging up here, and I outlined a trend change that is occurring. And something to note with Bitcoin is that Bitcoin started to rise a few days ago, and it was after so many moves up in that gold market, people were really looking at alternatives. So you get to the precious metals and checking on them overnight. You do have June gold down about $80 right now. At one point, it was down about $120 or so, just doing some rough math here, $110 with that low at 33.02. So we're going to want to look at some volatility adjusted. And if you get the metals edge, this is where you want to, when you see these types of large moves, you look at those farther tactical support and resistance as you go out. When you have normalized volatility, you look at the inner layer of those for your additions and your subtractions on your position or your intraday plays and things like that. Once you get $100 moves in gold, you can kind of throw it out the board. It becomes a bit cumbersome writing where the next resistance point is when these markets go up $100 in a day. It's really tough to identify some of those levels. So you get a $100 move in gold 3 days in a row. I mean, let's have a reality check. Is gold going to go up $100 a day for the next 50 days in a row? I don't think so. I mean, I was in a pork belly contract once that went limit up for 32 consecutive days, and that was quite interesting. And what happened after that? Well, the exchange, they got rid of that pork belly contract and it no longer exists. I was one of the last people to ever trade that contract. So gold isn't a product that's so scarce there like pork bellies or things like that, where there are alternatives. And we began to notice that, hey, Bitcoin began to rise as an alternative a few sessions ago. It'll be interesting to see if these higher interest rates on the 10-year note, on the 30-year, start to attract foreign buying back into our bond auction. So we'll want to keep an eye on that. Again, remember, it's not just one thing with these markets, it's everything. So what are the main drivers on gold right now? It's been the ETF flows, hence the little guys starting to allocate there. And then it's, of course, been Chinese buying, because remember, we look at when was the market making its move, and it was the overnight session, which is mostly the Chinese buying there. And then we look at, hey, how much news coverage has gold been getting recently? I mean, my phone's just ringing off the hook here. And a lot of times I tell you guys that when you start seeing me on all these alternative programs covering gold, silver, or any kind of market out there, oftentimes it indicates the potential for a top. So what was the missing ingredient on this gold market? I think that if volatility would come down a bit, these were more organized like $30 to $50 move higher. And then also you get managed money flows coming into the market, because yesterday we looked at in the metals minute, we identified that, hey, managed money just hasn't been participating recently into this gold market and this gold bull market. I think that that's an important aspect here, an important ingredient in the prospects of a higher move up in the precious metals. So looking at the ETF flows, because that's one big component that has been driving gold and silver higher. Well, exchange traded funds, they did not add, they cut 96,000 troy ounces of gold in the previous holdings in the last trading session, bringing this year's total to 6.52 million ounces. Now, ETFs, they did add 56,000 troy ounces of silver. Not a big move up, but there was an addition here, and it brings this year's total net purchases to 17.4 million. So what have we been monitoring? Because these numbers here, unless there's something dramatic, unless you see a seven-figure move in the silver market or that kind of massive cut in the gold market, it really doesn't matter. These are just ripples here and there. But gold, you look at that percentage change, 7.9%. And that's the first downtick we've seen in a while. We've been climbing the ladder up. Now we might be peaking on that. So we'll see if some of the outflows come out and some of the confidence goes into things like Apple and Tesla, which are up in the pre-market, or people start looking at Mag 7 stocks or AI or anything for what that matter is, just looking at other alternatives out there as opposed to gold. You look at silver 2.4% unchanged from yesterday. Now, something to note, and people love this particular ratio here, and remember I said that it's not really able to have a valuation standpoint between gold and silver anymore because of the changing dynamics and the characteristics of it. One's got so much demand as far as industrial metals concerned, and the other one is something that's bought by central banks and things like that. So if you look at the gold silver ratio, 106.5 yesterday, dramatically overstretched here in terms of historical standpoint, and we've come down 5 handles to 101.5 here in today's session here as of this recording. So big break in the gold market, and silver futures up a nickel at 32.95 on the May contract. I think that these opportunities here on the upside with silver futures gives you an opportunity to roll out of that May contract and start looking at some entries on the July contract a bit lower if you are looking at some place to roll. Now, something to note, and another market that we've been identifying to the upside in the market, and the market participants, the news flows and things like that have just been ever so bearish on the crude oil market. I think that crude oil futures being up 73 cents, you've got the June contract at 64.40 last. It's something to look at and keep an eye on here, because a couple things here. One, Iranian sanctions. Those have been picking up. The US, they had sanctioned an Iranian national and his associates for shipping liquefied petroleum gas and crude oil from Iranian markets over to foreign markets, specifically over to China and things like that. China is the number 2 source for imports for Iranian LPG and things like that. So they're nailing that. They're putting a lot of pressure on Iran. And then continuing on crude oil, you got oil prices rising for the second straight day. Again, Trump not indicating he wants to fire Jerome Powell, kind of provides some stability to the markets, to the economy, to the way people view the US and things like that. Then you get the API report coming out showing that US crude oil stockpiles, they had fallen last week here, and that oil prices are benefiting from that speculation that Iranian flows may be curtailed due to some of these US sanctions. So something to look at here is that the spread here benchmark between Brent here is at its widest backwardation since January. So it's showing that a bullish structure, and it's signaling a tighter supply scale here going forward. Another market we want to keep an eye on that's often a bellwether here for not only the global economy, but for silver futures and things like that, is copper prices, up about 0.75% at 491.35. That's up 3 cents here at the moment. And copper demand in China has remained resilient this year despite the trade war, despite the property crisis headwinds, and the buyers are taking advantage of the price slumps and adding to some supplies out there. So they're saying that despite the global market turmoil and forecasted surpluses, copper demand in China remains strong, with local yuan price futures indicating near-term tightness here in the scrap metal market continues to tighten due to what's it saying here? Retaliatory levies. So, oh, that's interesting though. So they're saying that no matter what on here, that they've been really actively buying in the copper market and any kind of structural weakness. Something else that I'll note here is that you look at some of the grain markets. I think that one thing is that China and the tariffs and the U.S., they want to make this deal because of the fact they also want to support the farmer. They've been getting a lot of notice here recently and things like that. And China is a very important component as far as buying some of the U.S. agricultural products and things like that, saying that they have a limited amount of time of soybean supplies and things like that. So it's something that we definitely want to keep an eye on as well. So you got any questions, shoot an email to info@bluelinefutures.com. And then remember that futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading.